Thank you, Ryan. I appreciate it. And thank you, everyone, for spending your Wednesday evening with us here at AAII. I'm excited to talk about AAII's dividend investing service. I'm going to walk through the DI service today. So it is a dividend investing open house. And you know, my colleagues were joking with me earlier. They said, hey, it is an open house. And if you were in my condo right now, you would smell an aroma of vanilla candles, and there would also be some cookies waiting out for you. So I will share those if you happen to be in Chicago. And I'm just going to apologize from the get-go. I am in Chicago, and I do live across the street from a fire station. So if you do hear some sirens in the background, that's what it is. So, so with that, let's get started. So again, thanks for joining me tonight. We're going to talk about AAII's dividend investing. We also call it DI. It is an open house. I am Derek Hageman. I am the editor and product manager for dividend investing, and I'm also a financial analyst at AAII. So for tonight's open house, just a presentation overview. I'm going to first start with AAII's dividend investing strategy, and then I'm going to talk about some benefits of dividends. I'm going to get into the dividend investing model portfolio. I'm going to present the dividend investing team to you. And I'm going to touch briefly on the three pillars of dividend investing, and I'm going to present some select DI screening characteristics. And then I will touch on, I'll do an overview of the service itself. So I'll talk about the DI weekly update. I'll talk about the DI monthly report. And one of our newest features, it's the Ask Me Anything About DI webinars. I'm excited to share some more information about that. And then finally, we'll do a live tour of the website. So I imagine the actual presentation will be right around 30 minutes, and then I'll take about 15 minutes for Q&A. So with that, let's get started. So what is AAII's dividend investing strategy? Well, the strategy, we seek stocks that have the potential to rise in price and make larger dividend payments in the future. It really is a total return strategy. So we're looking for dividend growth and income. And also we seek to identify the best dividend investment opportunities. And what we do is we focus on a select universe of well-financed companies, and really we're looking for companies with a long history of sales growth, earnings growth, and of course dividend growth. We look for companies that show characteristics of positive free cash flow. That's really important. And unlike some ETFs, we do have some valuation criteria that we use to select companies to be a part of the DI portfolio. So we'll get into that in more detail as we progress throughout the presentation. And really the strategy, it's based on studies of market factors that have contributed to strong long-term market returns. And really, I think the unique value proposition of dividend investing at AAII, it really provides subscribers complete control. You have control over the addition and deletion decisions. You have complete control of your tax situation. And this is unlike some dividend investing ETFs. You really have no control over when the portfolio manager is going to buy and sell a holding in the ETF. And again, you have no control over the tax situation. And I'll get into some of the services that we have as part of AAII's dividend investing. We have a weekly email with commentary. We have a monthly dividend investing newsletter. And then of course we have an archive of all these articles, everything that's ever been published related to dividend investing going back to 2012. We have an archive by year. And when we get to the DI website tour, I'll show you some of those features. And really just the bottom line of AAII Dividend Investing, and it really fits the mission of AAII as well. We're all about providing the education and the tools necessary to analyze, research, and in this case, for DI, manage a successful dividend portfolio. So here I just like to, why are we even talking about dividend investing? Well, there are several benefits. I have a few listed here. I'll just touch on a couple. Passive income. So dividends provide a steady flow of passive income, which you can choose to spend or reinvest. Inflation protection, that's another benefit of dividend investing. And unlike bonds that pay fixed income, many companies increase their dividend payment each year. And I'll just touch on one more, number 5, less volatility than other stocks. So dividend payers, they tend to be large, financially strong companies with more mature businesses. And with those mature businesses, there typically is a cushion against market risk. So there's a few of the benefits of dividend investing. I also like to show this chart that was put together by Ned Davis Research and Hartford Funds. And it was a study that they conducted from March of 1972 to the end of 2019. And really what this study did was, it says dividend growth may be a key to outperformance. So you can see the chart there throughout the period that we're looking at, 1972 through the end of 2019. And really I've highlighted the first one. It's called dividend growers and initiators. So of this group, they also looked at dividend payers. They also looked at dividend non-payers. And you can see there that the dividend growers and initiators of this study, the returns were highest for companies that were dividend growers. And also beta, which is a measure of market risk, it was actually lower risk. So dividend growers and initiators, they have historically provided greater total return with less volatility relative to companies that either maintained or cut their dividends. So this is more important than ever. So let's get in and talk about AAII's dividend investing model portfolio. So what is it? It is a model portfolio. We do have real capital investment. We started with $100,000. The portfolio, it started in 2012. And what it is it's 24 hand-picked dividend-paying growth stocks. And a few of the characteristics we look for to be a company in the portfolio, it has to be a US exchange-traded company. So there's no international or emerging market companies in this portfolio. It's US exchange traded. It is very diversified across sectors. If you were to look at the holdings in the portfolio, we have companies in technology sector, healthcare, consumer cyclicals. So we have 6 or 7 different sectors that are represented. We also have financials and consumer non-cyclicals, among a few other sectors. A few categories that the model portfolio does not invest in. We do not invest in REITs or MLPs, and that's simply just because of the tax situation related to those 2 vehicles. They're great vehicles. There's a lot of dividend investing portfolios that do have those holdings, but those are a few of the criteria that we do exclude REITs and MLPs. This next one, it does happen to have a large cap value tilt. We don't specifically screen for large cap companies. It's just large cap value companies, they're the ones that tend to pass our screen. That doesn't mean if there's a small cap or a mid cap company that passes the screen, we'd be happy to hold that a company like that in our portfolio. One thing that's unique about the DI model portfolio, and based on the current portfolio consumption, we actually have dividend payments every single month of the year. That's one of the great features of the portfolio. Again, we didn't seek out that strategy. It just so happens that the current composition of the portfolio pays monthly's dividend. I think that's a great feature for people that are looking for that retirement income or just dividend income in general. The current yield on the portfolio, we're at 3.1%, and the market's yielding about 1.8%. And these numbers are as of last Friday's close. I hate this next one. I hate to call it our benchmark, but we do compare to the Dow Jones US Index. It's ticker IYY. I'll get into that in a little more detail later on. The DI portfolio, we also use proprietary quantitative strategy, so it's really rules-based. We look at over 40 different characteristics to have a company be included in the portfolio. So it's really rules-based. We're trying to take our own behavior and biases out of the picture. So we have a lot of buy rules, we have sell rules, and we'll get into those in a little more detail as well. And one other feature of the dividend investing model portfolio and service, we send out alerts to members for any portfolio additions and deletions. And again, I'll get into that in a moment. So if you look to the top part of the slide, this is just a sample of some of the current holdings in the DI portfolio. Again, we hold 24 different companies. Some of them are Walgreens Boots Alliance, PepsiCo, Medtronic, United Healthcare. There's a company, it was one of our most recent additions. It's called Hubble Incorporated. It's a company that may not show up on many dividend portfolios. It's a little under the radar. So we definitely have companies that are household names like the PepsiCos, the United Healthcares, but we also seek out companies that are under the radar. And of course, we have the Home Depot in the portfolio as well. Some of the former DI holdings, a sample there. We owned Apple, we owned Procter & Gamble, we owned a utility called WEC Energy Group, we owned Microsoft, and once upon a time we owned McDonald's as well. And I'll touch on that later as well, but a lot of the reasons that those are no longer in the portfolio is because they did hit our valuation threshold. We felt like they were overvalued based on their relative to their historical dividend yield. So there's a sampling for you of the dividend investing model portfolio. Let's talk about the team. So again, I'm Derek Hageman. I am the editor and product manager for AAII Dividend Investing. I'm also a financial analyst at AAII. Before working at AAII, I was an equity analyst at a value investment fund, and I spent several years as a private equity investor as well. Dividend investing, we have an investment committee. It's made up of actually the president and CEO of AAII, John. We also have Charles, who many of you probably know. He's the vice president and financial analyst at AAII. He is also the editor of the AAII Journal. Wayne Thorpe, he's also on the investment committee. He's a CFA. He wears many hats at AAII, so we're fortunate to have him as a part of the investment committee. And really, we have monthly meetings where the investment committee gets together. I talk with them about the portfolio. I review the holdings in the portfolio, what's working, what's not. And I also review with the investment committee any new additions to the portfolio and deletions to the portfolio. And of course, I have to mention the great research team that we have at AAII. We have a very experienced team. It includes a group of finance interns that are currently in the honors finance program at DePaul University. So we have some great young minds doing a lot of the research, company research. So Before we get into the overview of the services, I wanted to talk about the 3 pillars of dividend investing. And this is really how I frame the things we look at in 3 big buckets. So there's valuation and attractiveness. That's one of the pillars. And that's really, we look at valuation because stock prices, they tend to fluctuate between high and low extreme valuation levels. And these relationships can be used to determine a stock's value range. We also look at PE ratios, but the main valuation metric that we use at dividend investing is the dividend yield. One of the other pillars we look at growth trends. So of course, a company's success, it's driven by its ability to generate sales and really convert those sales into earnings and cash flow. So you can see there, I've included a few of the characteristics that we analyze. We look at revenue trends, operating margin trends, earning per share, and of course, we look at the dividend history. We're looking for consistency, and we're looking for companies that have grown their dividend. And we always ask ourselves the question, does and can the company grow its dividend? So looking at those growth trends helps us answer that question. One of the other pillars that we look at, we look at financial strength and quality, and we're trying to understand the company's underlying financials and its ability, again, to generate cash, pay its obligations, and return capital to shareholders. So some of the characteristics that we look at the earnings payout ratio, we look at leverage ratios, we look at free cash flow, and of course, we look at how a company has returned capital to shareholders. So we look at share buybacks and we look at dividends. And we're really trying to answer the question, can the dividend payment be sustained in the future? So that's the framework that we use at a high level, the 3 pillars of dividend investing. I told you I was going to talk about some of the screening characteristics we look at. So to qualify, you have to pass, and this is just a sampling of a few of them. Again, we look at over 40 different characteristics, but here are some of the ones we look at to add a stock to the portfolio. We look at the current dividend yield. We're looking for companies that have a greater dividend yield that's greater than its 5-year average. We look at annual dividend increases. So for a company to be in the dividend investing portfolio, it has to have at least 7 consecutive years of annual dividend increases, and that's just at a minimum. Many of the companies we hold in the DI portfolio, like Medtronic, PepsiCo, Walgreens that we showed earlier, they've all been paying and consecutively increasing their dividends for over 40 plus years. Dividend growth rate, again, that's one of the characteristics we look at. We're looking for a 5-year dividend growth rate that's greater than 3%. We're also looking for a 5-year sales growth rate that's greater than 3%. Operating margins, that's really important. We're looking for operating margins for the last year to be greater than or equal than the industry operating margin, so the median for the industry. We want it to be, if it has greater operating margins, that usually shows that the business model is strong and they have some unique characteristics that other competitors in the industry don't have. So they have some competitive advantages. Another thing we do look at debt to capital. Very concerned about debt levels. So we look at long-term debt to capital over the last quarter. It should be less than or equal to 50%. So those are some of the screening characteristics we look for companies to be added to the portfolio. So for every company that's in the DI portfolio, at one time or another, when it was added to the portfolio, it met and passed all of these criteria, among many other. On the flip side, what do we look at to delete a company from the DI portfolio? So here's a framework we look at. Does it have an excessively high yield? And that's really a signal that potentially a dividend cut could be on its way. And of course, I don't have it listed here, but if a company were to cut its dividend, it would be deleted from the portfolio. We're looking at the company's yield, and again, we're looking for companies that have yields greater than the market or the company's historical range. We also look for, a company that has lacked dividend increases. And again, this is on a case-by-case basis, but really we're looking for growth that's consistently higher than inflation. So if they're raising their dividend, but it's really a small increase and it's growing less than inflation, that would be a consideration to delete the company from the portfolio. Another thing we look at, again, I talked about debt levels. We also look at the interest coverage ratio, and we would look at a company that has a interest coverage ratio below 2 times as a potential signal for a sell from the portfolio. And you can just think that if there's a change regarding the growth, the consistency, or the sustainability of the dividend, that would be a strong signal to delete the company from the portfolio. So next, I just wanted to cover some of the services that are associated with the AAII Dividend Investing service. We have weekly updates. I mean, these are great. These are emails that are sent out every Friday. I spend the whole week putting together my commentary, and again, it fits AAII's vision. We're always trying to educate, so there's always an educational component to these weekly updates. We'll also have market commentary, and where possible, we'll always try to be dividend focused. So we'll reference studies, we'll reference trends, and we're always on the search for the latest research, anything dividend related that we feel our subscribers would find interesting and valuable. We do also do market recaps. When the tariffs were a big deal last year at this time, we had several articles on impacts of tariffs on the holdings in the DI portfolio. So we did a lot of analysis on that. We also provide DI portfolio updates. So if there's any significant news items for any holdings in the DI portfolio, we always highlight and call out any important dividend dates. So if there's a dividend that's been declared, we're very clear about that. We announce that to all the subscribers. We also talk about identify the record date, and then of course the ex-dividend date, so that subscribers can make sure if they want to receive the dividend payment from that company, that they own the stock at that time. One of the newest features that we've added in the last year or so, we have dividend investing videos. So usually these videos, they are related to the commentary that I write for the week, but there are a few other nuggets in there as well. So that's been a fun feature. I think it's been well received by subscribers. If they don't want to read the commentary, they can just click on the video and watch a short 3 to 4 minute video on the commentary for that week. And of course, one of the unique values of AAII's dividend investing is that we do receive a lot of questions. The questions typically come directly to me. If they don't come directly to me, they'll go to our member services and they'll forward those emails to me, and I will personally address as many of those questions as possible. And the great thing is I mean, our members are fantastic. They have great questions. And typically, if they have a question, that probably means that many of our other subscribers have the same question. So a lot of these questions that are asked, they actually become topics of my weekly updates and part of my monthly report as well. And I just included a few of the recent topics that I've covered in some of the weekly updates. I talked about the Federal Reserve. It restricted bank dividends after the most recent stress tests. I had a weekly update about building your dividend investing portfolio. We had a lot of new members that signed up, and they were curious of how to actually go about using the program, using the service, and really building and monitoring their portfolio. So I dedicated a weekly update to that topic. A fun one was I called it the alphabet soup of economic recovery. There's been a lot of market forecasts out there from economists and equity strategists on what type of recovery we'll see, as a result or coming out of the coronavirus pandemic. So whether it was going to be a U recovery, a V recovery, an L, I heard a fish hook, and also I heard of a Nike swoosh. And I had fun with that article, and I addressed that question to members, and I wanted to hear everyone's opinion, to hear what they said, and got a lot of responses on how they felt the recovery would be. And another one I focused on was there was a study by FactSet for this particular article, and they were talking about negative earnings surprises and how they actually were not being punished in the second quarter. So that's the weekly update. That's again, it's an email that goes out to subscribers every Friday. And another part of AAII's dividend investing service, there's a monthly report. And again, it's very educational in its content. It has a lot of market commentary. It gives portfolio alerts. So if there's a new addition to the portfolio, a deletion to the portfolio, we'll highlight that in the monthly report. We'll also give the investment thesis for behind why we added a company, how it met and exceeded a lot of our characteristics. And again, we give the reason for if there is a deletion to the portfolio, we give the reason why. What else is covered in the monthly report? We give a listing of the recent earnings announcements, how companies' actual earnings came in against the consensus earnings estimates. So did they beat earnings? Did they miss earnings? So we highlight that in the monthly report. We also look at some of the other dividend. We look at dividend analysis and some of the characteristics. And I think one of the great features of the monthly report, again, we own 24 stocks in the DI portfolio. So every month we do an in-depth company report on 4 of those companies. So we just review how they're stacking up against the characteristics, the 3 pillars of dividend investing, which is a theme that you'll hear a lot as a subscriber to dividend investing. We'll talk about some of the bullish points related to that company. We'll look at what the bears are saying as well. It's always good to look at both sides of the investment thesis. I feel like there's always something to gain. There's always insight to take away from the bull and bear thesis. And again, the back page, we call it the back page of every monthly report. It is strictly DI. It's an educational article having to do with dividends. So again, we look at studies, we look at trends, we'll look at the model portfolio in detail, and it's a great feature of the dividend investing monthly report. And I think it's something that sets it apart from some other services that are out there. So some of the recent topics that I covered. I talked about observations in a lower for longer environment after the Fed came out at one of its last Fed meetings, how they talked about they don't foresee raising interest rates throughout 2022 and probably not until well into 2023. I had one monthly report. It was called DI Portfolio. We called it It's in Good Hands with Allstate. Allstate is one of the most recent additions to the portfolio. So I got into the thesis for why we were adding that to the portfolio. There was also another one titled Turning Trash into Cash, and that was an investment in Republic Services, which is a garbage hauler, a nationwide garbage hauler. And then I had an article about called it a Buffett of classic advice. I'm a big believer in Warren Buffett, great value investor, and occasionally will will highlight some of his great advice, especially when he comes out with the annual shareholder meeting for Berkshire Hathaway. There's always some great insight, and we'll touch on that as a part of the monthly report. I mentioned earlier that one of the newest features for DI, it's something I'm very excited about. It's called the Ask Me Anything about DI webinars. This is a new feature. We had our inaugural webinar episode last month, and typically we foresee this coming out the week following the publication of the monthly report. We'll just do a quick recap of the monthly report. And really, it's this whole thing. It's a 30-minute conversation where DI subscribers, they can ask questions specific to dividend investing, and they can get answers in real time. I think this is a unique value add for dividend investing. You know, I often think that people that invest in dividend growth and income ETFs, there's a lot of good ones out there, but I've wondered to myself, it's like, okay, if people that are invested in the ETF, if they had a question, would they be able to even get a hold of the portfolio manager for that ETF? My guess is that might be a challenge, but really at AAII Dividend Investing, we pride ourselves on subscribers having access to the team, having access to me, and really just getting their questions answered. Now, of course, one caveat is we can't give personal investment advice, but if there are questions about dividends, if there's a study that someone read recently and they had questions, that's definitely fair game. And you know, during these 30-minute webinars, we'll review the methodology that we use at dividend investing. We'll talk about remind people of the strategy. We'll review some of the holdings, again, the additions and deletions, and just cover some general dividend concepts. All right, so I think we're gonna transition in a moment from this presentation. We're gonna do a quick DI website tour, and then I'll come back to this presentation. So just bear with me while I transition. Okay, so as a subscriber to AAII's Dividend Investing, there is a member exclusive website. It's www.AAIIdividendinvesting.com. And when you enter that in, this will be the home page. And you can see it, we highlight the most recent weekly update. And you can see to the right, that's the portfolio calendar for the week ahead. So we inform our subscribers of what companies are going to be trading ex-dividend. You can see here that Texas Instruments, it's one of the technology holdings. It's been a great holding for the portfolio. They're going ex-dividend actually tomorrow. We also highlight stocks that are scheduled to make dividend payments, so people can plan ahead what to expect in the week to come. Are they going to be receiving dividend income that week? And we also highlight some stocks that are scheduled to announce earnings. I mean, this is an incredibly busy time. Earnings season started in earnest last week, and I think we had I want to say we had 6 to 8 companies that reported. We have another eight companies reporting this week, and we have a list of the companies, and if it's reporting after the market closes or before the market opens. And we show what the earnings estimates are, the consensus estimates from analysts. So it's great information. It's right there at your fingertip. So that's the home page. I'm not gonna actually click on these live. I preloaded some of the tabs, but we have a tab here called DI Portfolio. And if you click on that, it's exactly what it says. It shows on this particular tab, we have the holdings. We could click on here for performance of the individual holdings, dividend payments, dividend analysis, any fundamentals related to that holding. And then we have a news section as well. But let's just, for this tour, let's look at the DI holdings. So it shows all the companies, so Allstate, Amgen, we own BlackRock, Comerica, Cummins, Eastman. There's a few examples. We look at we highlight the portfolio alert. So when we send an alert out to subscribers, we have the date here, we have the price of the alert. And again, one thing to note on the portfolio alert, we never front run our subscribers. So we'll send an alert out on a Friday, and we always give our subscribers the first few days of the following week to react to our addition or deletion alert if they choose to do so. And we also, on another screen, let's see, under here, we have a tab called Transactions. I'm not going to click on it, but it literally has every transaction that has happened in the portfolio since 2012. You can see all the buys, you can see all the sells, you can see how many shares the portfolio purchased, the dollar amount. You can see all the ins and outs of the portfolio. So highly transparent, everything's there for everyone to see. You can see the date that we transacted on, and again, you can see the dividend payments that come into the DI portfolio. A few other things on this tab. We have the current price.
We have the total return since purchase. You can see here that Allstate has a total return since purchase of less than 1%. This is the most recent addition to the DI portfolio. It was added a little more than 2 months ago in May. We are long-term investors, so we will be patient until our investment thesis has an opportunity to play out. We also show the current dividend yield, market cap, sector and industry classifications for each of the DI portfolio holdings. And another great feature is the notes column.
So here under notes, if you were to click on this, it would take you to all the news stories that we have written and reported on for that particular company, all in one easy to identify place. So that is the DI portfolio tab. The next tab, it's called DI ideas. This is something that we definitely listen to our members, and this is a direct idea. This came from a lot of members saying, hey, we love the companies that are in the portfolio, but we'd like to just have some other ideas. So I think this has been around for maybe the last 2 years. This is a great feature. It gives members and subscribers some other DI ideas that may not necessarily be held in the DI portfolio. However, what these companies are, and I'll just scroll through it, at any given time, there could be 40 to 50 companies depending on the week. And right now you can see at the bottom, it says there's 43 companies passing, and that's as of yesterday's close. And so what these companies are, what this DI ideas, they are companies, they all pass our quantitative filters. So we could consider any of these for additions to the portfolio. However, one caveat is just because it passes the screen doesn't necessarily mean that it will get added to the portfolio. But here's another universe of stocks that subscribers could have some confidence in, that we've analyzed using our 3 pillars of dividend investing, and we've used our 40 proprietary rules-based filters. So this is just another great feature of dividend investing. And again, this came as a direct response from subscribers wanting some more ideas. And I'll just, before I shift to the next tab, what we have here, we have companies, we have their current yield, what the yield was a year ago, the 5-year average, and we also have the 5-year average high, the 5-year average low. We also show the dividend growth rate the 5-year annual average growth rate. And then we do a dividend yield valuation based on these 5-year high and 5-year low average yields. We also show the payout ratio and a few other things. So that is a great feature, DI Ideas. We talked about this. So this is the weekly update. We have a tab that is dedicated to all the DI weekly updates. Again, going back to 2012, we have here highlighted the most recent 4. You can click on this. I talked here. This was another great example of getting feedback from subscribers. We had a few subscribers that wanted some ideas that may not necessarily pass the DI quantitative filters, but some technology companies that were paying dividends had increased their dividends for at least 7 years. So I did some research and presented some findings here and just wrote about some technology stocks in general. And here you can see, it might be small on your screen, but here were some companies that, again, these may not meet all the DI portfolio characteristics, but these were companies that were specific. They were S&P 500 dividend paying technology stocks. So that was one of the weekly updates. You can see a few here. And if you hit on previous updates, again, it will show you all the weekly commentary ever written since going back to 2012. And let's see, let's go to the next tab. There's a monthly report tab, and similar to the weekly update, it's an archive of all the monthly reports. So here we highlight the most recent 4. You can click on here. You can see this one was about observations in a lower for longer environment. It featured a summary of DI performance for June. We did in-depth stock reports for Eastman Chemical, Eaton Corporation, Texas Instruments, and Williams-Sonoma. So those are 4 companies that are held in the DI portfolio today. And then our back page article, which again is educational focused. We talked about some different dividend reinvestment options. So you have access to every monthly report going back to 2012. And we also have a resource tab. This is a great source of information for subscribers. There's a quick invest guide. You know, that's a question we get a lot. It's like, okay, great. I subscribe to DI. I'm excited. I believe in dividend growth and income stocks. How do I get started? So we have a quick invest guide. It walks you through step by step how to get started. We also have a more in-depth user's guide. And we've also put here a collection of all the videos that we filmed for the weekly update. We have those conveniently located here. And that's also where the Ask Me Anythings will be. And then we have frequently asked questions. So it's a good place to go just to see what questions we're getting asked a lot. And so there's a lot of resources here. We also have some tools down below. So some great resources for members. And of course, you can always reach out to me, anyone on the team, or our customer service group. So a lot of options if you have questions. And the last thing I wanted to highlight for the website tour is this is just a convenient place to go. Here we call them dividend articles, but these are really that back page article that I was talking about that is part of every monthly report. You can see that, okay, for example, in 2019, we talked about DI monthly dividend cash flows. So that was an analysis that we did, just showing that every single month of the year, the current DI holdings pay a dividend. We talked about beating the street with shareholder yield. That is a concept that was popularized by James O'Shaughnessy. It looks at dividend yield combined with share buybacks. So we talk about that strategy, how it works. We define the key terms. And so that was a great article. A lot of subscribers found that useful. We do have a recap the first month of every year, just what were the top and bottom performers for the year. We talk about why it was the top performer, why some others holdings didn't perform very well. And here's a great one from 2018. It's called Why Would You Sell a Stock? So we get into more depth on some of those signals that I talked about earlier, and just things to consider when you're thinking about selling a stock. So a lot of great resources on our website, and it is dedicated to subscribers. It's subscriber access only. So let me just go back to the presentation. So bear with me one more second. Let me fast forward to where we left off. So yeah, just a recap of the website. There was the DI Portfolio tab, DI Ideas, weekly update, monthly report, resources, and then just a summary of all the articles that have been published since inception in 2012. Here's a few DI testimonials. So again, we're always looking to improve the service, make it better. We want to make sure we're providing value to subscribers. So we always survey our subscribers. We do an NPS survey where subscribers can rate the service. There's also a few open-ended questions, what they like about the service, what could be improved, and so we do that on a regular basis. Again, though, every single one of those surveys is read, reviewed, and again, we get a lot of our weekly update ideas from these surveys. We get a lot of new feature ideas. I'm looking forward. One of the goals I have for 2020 is to bring out a dividend investing grader. So a simple to use grader where you could type in a ticker and it puts it through some of our the characteristics that we use, and we give a company a grade. So I'm looking forward to hopefully getting that out in 2020. And that is something that was definitely asked for by subscribers, and we're going to make that happen. So I'll let you read through the testimonials. I'll read the bottom one. So a DI subscriber, and these are anonymous unless people choose to make themselves known. This DI subscriber said, the stock analyses developed by Hageman. And I just have to say, I'm not the one that actually developed AAII's dividend investing. If you go back to the dividend investing investment committee, you'll see Charles and John. They were the ones that were instrumental in developing the strategy. So I'll give them the credit where credit is due. And but this DI subscriber goes to say that the stock analyses developed by Hageman are concise, detailed, and insightful, and I truly enjoy his columns. So that's definitely a positive testimonial. I love to read those, and I also like to get the ones where we're being challenged to improve the service as well. So for the DI open house and for attending today's open house, we do have a special trial offer for $1. We have the website here where you can go to have that $1 trial. I think this is a great offer. It is risk-free. It gets you access to the DI portfolio. So all those tabs on the website, you can see all the holdings. You can read all the weekly updates. You can review all the past educational articles. You have full access to the website for 3 months. I think it's great. I love dividend investing. You attended tonight's webinar because I think you have an interest in dividend investing, and dividend matter to me, and I hope they matter to you as well. So I think this is a great offer to try out AAII's dividend investing. So definitely click on that link if you're interested. And I just wanted to highlight some of the upcoming webinars. And actually, I think I'll hold off on, I'll do this now, and then we'll get to some Q&A. So some of the upcoming webinars, and you can always register at www.AAII.com/webinars. And we have two scheduled for the next 2 weeks. So on August 5th, we have the Alliance for Investor Education panel, and they're going to be talking about staying the course in a time of upheaval, what to do now. You won't want to miss that one. And then on August 12th, we have Wayne Thorpe. Again, he's the senior financial analyst at AAII. He is also the editor and product manager for the Stock Superstars report. And he's going to be talking about investing like a stock superstar, a contrarian approach to seeking fundamental growth. And here we just have a disclaimer. Again, we can't give personal financial advice, but we're happy to answer any questions specifically related to dividends and the dividend investing portfolio. So with that, I'm going to stop sharing my screen. I am gonna look at some of the questions that came through. So let me turn that off, and let me take a look. I think we've received a lot of questions already. We also, when we sent out the notice about the dividend investing open house, people started sending us questions. So let's jump into this. I think we've been just about 30 minutes reviewing the dividend investing service, and so let's take some Q&A. So let's start off with the first one. John asked, concerning stocks that were included in the DI portfolio in the past, but deleted for some reason, are portfolio deleted stocks excluded from the DI ideas spreadsheet? I think that's a great question. I'm glad you asked that. And the answer is no. Just because a stock has been deleted from the portfolio, that doesn't mean that if it meets the current characteristics of our over 40 characteristics that we look for, if it meets those characteristics, it will show up on the DI ideas tab. Another interesting thing is we've actually owned a few stocks twice in the portfolio. So for example, we owned Walgreens, Boots Alliance a few years ago, and we also owned Medtronic. Well, as you know, we currently own them. But at one time, we did sell those, and I think, if memory serves me, we actually sold both of those holdings because they were above our valuation threshold. So their dividend yield was lower than the 5-year average yield for those companies. So that's one of the metrics we use. We felt like, hey, we got great value with these stocks. The valuation seems a little rich compared to relative to the history of that stock. And again, that's just, hey, we try to follow these quantitative filters. We try to take our bias and behavioral preferences out of the equation. So yeah, we sold. But if they met the criteria again, which they did, we were happy to own those. Those have been great stocks, long history of dividend consistency and dividend growth. So hopefully that answers your question, John. Let's see. Sandra asked, she had a comment as well. She said, I know how to buy stocks and I've been reading a lot to educate myself. That's great. We love subscribers that are looking for that educational component. She says that she's reading a lot to educate herself on which ones to buy. I've been buying IBM, Johnson & Johnson, Duke Energy. I have a list of stocks I want to buy, but I have been hesitating, although I think they are solid companies. I look forward to joining dividend investing. How does it all work? So hopefully this DI open house shed some light on that. We again use the three pillars for dividend investing as a framework. We look at different quant screen characteristics. Reviewed a few of those on the slide. Again, we look for companies that have consecutively increased their dividend for at least 7 years. We look at certain dividend growth rates, sales rates, margins that are greater than the industry that they're in. And we also have just more tactical, we have these quick start guides that walk subscribers through how to build and monitor the portfolio. So we also received a question from Mark. Mark asked, regarding ETFs that are dividend oriented, what is a simple way to determine the true differences between them short of actually comparing the specific stocks in each ETF portfolio? Okay, let me think about that one just a second. Yeah, that is a challenge with some of these dividend ETFs that are out there. You know, a lot of them have a similar strategy to dividend investing. They're looking for growth and income, but some of these ETFs, they hold hundreds of stocks. It is hard to know what each of the holdings are that comprise that ETF. So I would suggest reading the prospectus. This will help shed light on the ETF strategy. And in this prospectus, they might list a few of the screening characteristics that they use. They will most likely list the top 10 holdings. That can shed a lot of light on, you know, some of the stocks that are held in the ETF. You can also get a sense in the prospectus for the style of the ETF. Is it more value-based? Is it a growth-based? Or do they only look at large cap stocks versus maybe small or mid cap companies? And they will typically also have a breakdown of the companies in the portfolio. So they'll have an industry allocation, and they'll typically compare that to maybe the S&P 500 index, for example. So, you know, short of actually looking at every holding in there, those are a few tips. There is also Morningstar. Morningstar does a great job. They actually have a division that assesses ETFs and mutual funds. They have analysts that in their reports, they will maybe go beyond the top 10 holdings and list a few more of the stocks that are held, and again, the strategy. So I think that's the best answer I can give you, Mark, for your question. Thanks for asking that. Let's see. So we have a question here from Edwin. Edwin asked, do the companies in the dividend portfolio represent a diversified portfolio to mitigate market risk and volatility? Again, great question. He also goes on to say, could this portfolio be a safe place for a retiree to place 100% of their investable assets? As an example, if an investor had $1 million invested in the dividend portfolio right now, what would be the expected annual return in dollars and percent, excluding market appreciation and depreciation? So I can definitely answer the first part of that, Edwin. I cannot answer the second part of that. Again, I can't give personal financial advice. I don't know your personal situation, don't know your long-term goals, your constraints, your risk and return profile. But I'll definitely answer your first one about does the DI portfolio represent a diversified portfolio? I would say absolutely yes. We feel that 24 stocks is a good representation. We do have stocks in, like I mentioned earlier, we have technology stocks, we have basic materials, we have a few financial holdings, consumer cyclicals, and a few other sectors and industries as well. And when you stack up the DI portfolio against the S&P 500 index, for example, We are overweighted in a few sectors compared to them. We're also underweighted, but we definitely believe we have a diversified portfolio with the 24 holdings in the portfolio. And that's another one of those. It doesn't really fit the 40 characteristics that we look for when filtering, but it's more of a secondary due diligence that we'll use. We'll look at the current composition, and if we already have some financial holdings, even though it may pass the screening filter, we would probably hold off on that and look for a company that may be underweighted for its sector against the S&P 500 index, for example. So hopefully that answers your question, Mark. Or excuse me, Edwin. Let's see, we have one here from Everett. Everett asked, and I think this is a good question because it always comes up. Why has the dividend portfolio underperformed its benchmark and at the same time had more risk than its benchmark? And Everett goes on to say, for example, since inception, the DI portfolio has returned 127.9%, while the benchmark has returned 191.1%, and the DI portfolio has a standard deviation of 21.4%. Again, that would be a risk measure, while the benchmark has a lower standard deviation of 17.6%. And he goes on, Everett goes on to say, are you comparing it against the wrong benchmark? And if you are using the wrong benchmark, can you revise the benchmark to better reflect the performance and risks of the AAII dividend portfolio? Some great questions. Yes, while it is true that we have underperformed again, I don't like to use the word benchmark. I think it's more of a target. It is the Dow Jones US index, ticker IYY. I agree with you, Everett. I don't think it is the best comparison, but it is what we use. What I've actually started to do, because I have got this question a lot, and I think it would be a better comparison. I think it is a better comparison to compare it to a dividend-focused ETF or portfolio or index. So in all the monthly reports for the last few months, I've actually been comparing it to the Dividend Aristocrats S&P 500 index. So if you were to stack up the DI portfolio against a more dividend-focused strategy, our returns would be much more in line, and I think it would definitely be show better performance as opposed to the IYY. What else can I say? I just want to add that there are definitely a few reasons to choose to follow the DI portfolio. Current dividend income. If you were to compare the dividend investing portfolio to the IYY, you would see that the income portion, again, we use total return strategy, so that the income portion, there's also the dividend, the stock appreciation or depreciation. Those are the two components that make up the total return. But if you were to look at the income component, and that's what most of the subscribers to DI, they're very concerned about having dividend income, especially if they're retired, so they can be able to count on that income. So if you were to look at that piece of it, we've outperformed the IYY. What are a few other reasons? A few other reasons to follow the DI portfolio. There's a higher yield than the market. Again, based on last week's market close, the DI portfolio was yielding 3.1%, and the market was yielding 1.8%. What else? It's typically it does have less volatility historically than non-dividend paying stocks. You're right. Right now, it does show a little more volatility. You have, again, dividend income is more regular versus the alternative of selling off a portion of your portfolio each month. Could you imagine if you needed dividend income, and in March of this year, you had to sell off a portion of your portfolio. Could have been the absolute wrong time to sell off some of your holdings. So that's another reason to choose to follow the DI portfolio. And again, I talked about it before, just access, the educational component, and really just the complete control that you have with being a subscriber to the dividend investing portfolio. You decide when to add a stock to the portfolio, when to delete it. If you want to have short-term capital gains, long-term capital gains, you decide on the timing of selling a holding. You don't have any control when it comes to an ETF. It's the portfolio manager making all those decisions. All right, let's see what other questions have come through. I think I have about 5 more minutes. Just want to respect everyone's time. Let's see. Bear with me a second. Okay. Let's see. I have a question here from Anne. She asked, how is the service different from Sure Dividend? I do pay attention to some of the other services in the market. I'm not totally familiar with Sure Dividend, so I can't specifically answer that. I know Morningstar has a dividend service as well. You know, a lot of these services, they definitely have benefits. I'm not sure if they have the access to the editor that we have, and I'm not sure if they have the DI idea screen. But yeah, I mean, there's some great services out there. Let's see. Okay, we have a question from George. What is the DI performance for this year? And how much was the portfolio down in March? Okay, I don't have the March numbers off the top of my head, but I can talk to the DI performance. For 2019, the DI performance was over 29% for the year, and for year to date through Friday's close, the portfolio is unfortunately it is negative for the year. I think it is down about 11% for the year, and if you were to compare to the IYY, I think the IYY just went positive. I think it just squeaked out less than 1% return. If you were to look at a more dividend-focused strategy, the Dividend Aristocrats S&P 500 index, last time I checked, that was also down for the year. I think the last time I looked, it was down about 8%, just as a comparison. Let me go through, scroll through a few more. Yeah, we have one here from Barbara. She asks, does the website show the date you added the stock to the portfolio? Absolutely. We believe in full transparency. If you go to the DI portfolio tab on the website, and underneath that, there's a sub tab called transactions. And you can, again, see all the transaction dates, when a stock was added to the portfolio, when it was sold, and again, all the dividend payment dates and the amount. Let's see, I have Alan asked the question, how do I sign up for the special offer? Yeah, if you have, if you go to the presentation, you will see the link there. So absolutely, you can go to that link and it will, all the information will be provided for you. Let's see, we have a question here from Krista. In general, how long does it take for you to evaluate a stock and make the decision to act? buy or to sell? That's a very good question. So we do obviously monitor the portfolio daily, but we do not make buy or sell decisions. We make those monthly, and that again is after meeting with the Dividend Investment Committee. I typically spend hours researching companies that have passed the quantitative filters. I've read as many analyst reports. I've looked at how the company stacks up against the quantitative filters that we use. And so I have to go in, and the Dividend Investment Committee, it can be a pretty tough crowd, a lot of tough questions. And so I have to be prepared. I have to understand the investment thesis that I'm proposing. And the investment committee will either vote yes, that they agree, or that they won't agree. So typically I have to go in with a few different ideas ready just for the response from the Dividend Investment Committee. And to sell, it's really about, if you were to look at the framework that I put together in one of the slides, again, it's easy when a company cuts its dividend or suspends its dividend. That would be the first thing we would do in the next monthly report review. We would issue a delete for that company. So that's an automatic delete. So hopefully that helps give some insight into the process. Let's see what other questions. Let's see, there is another question from Everett. He asks, he would like more of a comparison to some of the other dividend growth investments like ticker NOBL, ticker VIG, and ticker SCHD. I have to be honest, I do follow those, I do pay attention. I don't know their return metrics off the top of my head, but that is something I've written about in the past. And yeah, I'll look at the performance, the return performance. I'll look at risk. So I'll look at volatility, standard deviation. So I would just say, Everett, please stay tuned. That is a topic that I will write about and do write about periodically. Let's see, we have a question from Jeffrey. He's asking, what about drips? So it's a good question. We do provide that on our website as well. So that's a dividend reinvestment program. So we will highlight if a holding in the DI portfolio has those types of programs and has dividend reinvestment programs. So we list that as well. And we typically then just ask for subscribers to go to the investor relations website for that particular company, and the company website has details on how to enroll in those programs or take advantage of those options. All right. Let's see if I can find one more. We just had a question from Liz. She said, hey, I missed the beginning of this webinar. Will this be recorded? Absolutely. This presentation is being recorded. You can find it on our website under www.AAII.com/webinars. We have actually a archive of all the Wednesday webinars. This one will be included. There will also be some notes that go out with tomorrow in an email. Any show notes, if we referenced any publications, any other resources, we'll be sending that out. And I believe this presentation will be available as well. So And again, feel free to send me any questions if I don't get to them tonight. I'm sorry I couldn't address them all. We did have a lot of questions come through. My personal email is dhageman@AAII.com. That's spelled DHAGEMAN @AAII.com. So feel free to send me any questions I didn't get to, and I'll try to answer as many as possible. So with that, I appreciate you joining me tonight. You know, you have a lot of options to do with you know, your evenings, so I really appreciate you tuning in. Hopefully you learned a lot about the dividend investing service and some of the great value that we offer subscribers. So with that, I wish you all good health and green arrows. Thank you very much. Have a good night.